Hey there! It's time to dive deep into a groundbreaking study that will change the way you see the stock market. Get ready for some mind-blowing results that will make you rethink your investment strategies. This is going to be huge. But before we dive in, let's make it clear that we're not financial advisors. However, we're about to take you on an adrenaline-pumping ride through an exceptional study conducted by University of Florida. Brace yourselves, because what they discovered will leave you absolutely floored. Picture this, my friends. Researchers from the University of Florida have just released a study that suggests an AI model called ChatGPT can predict stock market trends with astonishing accuracy. I'm talking about returns that will make your jaw drop. During the period from October 2021 to December 2022, they tested trading models powered by ChatGPT using public markets data and news. And guess what? These models generated returns exceeding 500% in that time frame. Can you believe it? That's like hitting the jackpot. But here's the kicker. While ChatGPT was making those massive gains, the S&P 500 ETF struggled and had a minus 12% return during the same period. Talk about a stark contrast. It's like ChatGPT was playing in a different league altogether. Now, let's talk about how ChatGPT outshined its competition. The study highlighted its superior performance over other language models like GPT-1, GPT-2, and BERT, as well as traditional sentiment analysis methods. ChatGPT was the real MVP in this game. So, how did they do it? Let's take a closer look at their methodology. The researchers gathered a massive amount of stock-related headlines from October 2021 to December 2022. They made sure none of those headlines were part of ChatGPT's training data to ensure fresh information. They collected a whopping 67,586 headlines related to 4,138 unique companies using web scraping techniques. Impressive, right? But they didn't stop there. They filtered out the irrelevant noise and focused on full articles and press releases, excluding any stock gain or stock loss headlines. They wanted only the juiciest, most relevant news. And to make sure they had the latest updates, they removed duplicate news. It was all about staying ahead of the game. Once they had their refined dataset, they used ChatGPT, powered by GPT 3.5, to evaluate each headline. It could determine whether it was good news, bad news, or unknown. And get this, it even provided explanations for its assessment. For example, when presented with the headline, Rimini Street fined $630,000 in case against Oracle, ChatGPT gave a nuanced response. Yes, the fine against Rimini Street could potentially boost investor confidence in Oracle's ability to protect its intellectual property and increase demand for its products and services. It highlighted the potential boost in investor confidence in Oracle's ability to protect its intellectual property and increase demand for its products and services. Talk about understanding the deeper implications. Now let's talk about the strategies they tested. Brace yourselves, because this is where it gets exciting. They tried out 6 different investing strategies, and some of them were like hitting the jackpot. The long-short strategy, which involved buying companies with good news and short-selling those with bad news, delivered mind-blowing returns of over 500%. But of course, not every strategy was a winner. The all-news hold strategy, the equally weighted hold strategy, and the market value weight hold strategy resulted in net losses. Hey, we can't win them all. And for those who like to play it safe, the long-only strategy was still a winner. By buying companies with good news, investors enjoyed a solid return of around 50%. Not too shabby, right? Cha-ching! Can you believe that? Over 500% returns. But that's not all, my friends. The short-only strategy, focusing solely on short-selling companies with bad news, gave returns of nearly 400%. It's like capitalizing on the dark side of the market. Now let's talk about the implications for the finance industry. This study has caught the attention of prominent hedge funds like 2 Sigma, D.E. Shaw, and Renaissance Technologies, who already incorporate sentiment analysis into their automated trading systems. The outstanding performance of ChatGPT in understanding headlines and their implications could trigger an arms race as funds vie to gain an edge from generative AI. And it doesn't stop there. Businesses that have developed their own proprietary sentiment analysis machine learning models might find themselves outperformed by a simple ChatGPT prompt. Even companies claiming to have world-leading NLP like Lexalytics could face both an opportunity and a challenge as generative AI tools emerge and render past models obsolete. Investors are eagerly anticipating the upcoming years as the finance industry undergoes a dynamic transformation driven by the rise of generative AI. Among those with a particularly bullish outlook is ARK Investment Management, a technology-focused firm. In ARK's 2023 Big Ideas report, founder Cathie Wood highlighted AI as one of the defining trends of this technological era. "We've been working on artificial intelligence for a long time now," said Wood. "And I think some of the things we're seeing are just the beginning of the impact that artificial intelligence is going to have on every sector, every industry, and every company." That's all for today's video, folks. I hope you're as blown away by these findings as I am. I will post a link to the University of Florida study in the description below. Remember to hit that like button and subscribe to my channel for more mind-blowing content. And don't forget to share your thoughts in the comments below. Are you ready to embrace the power of AI in the stock market?